Trendsetters. Hey, Trendsetters. It's your girl Heidi, and I'm here with Phillip. Phil, how you doing?
Yeah, blessed and highly favored. We're ready to rock and roll, family. We're ready to rock
Ready
and
to
roll.
rock and roll. So today, what we going over today, Phil?
So we're gonna go over some investment terms.
Okay, so we're gonna recap on some of the
Hmm.
things that we started in last week.
Yeah,
Okay, the floor is yours.
yeah. We're gonna start with something that is common to everyone, even a child, which is real estate ownership, home ownership. That's owning a condo or a co-op or a one family home. That's investing in real estate. And all real estate do appreciate in value. Some areas much faster than others, but all real estate appreciate in value. So it is an investment. Unlike, I mean, yes, you have to have some place to stay, and if you can't afford to invest in real estate, you have to pay rent. But any opportunity that you have to invest, you get a condo, a little condo. You come out of college, you get a little condo studio. That's an investment there. As you flip that later on in life, as things get better, you can buy a two-family investment property or a three-family or a four-family. Those are income generating properties.
Or if you have siblings, these are the type of conversations that you should be having with your siblings, right?
Mhm.
That all of you now are young adults and planning for generational wealth or planning for the future. Let's see how we can pull our resources or pool our resources together and invest in a real estate property. And, maybe they can live on the home, like you said, or they can lease out the home.
Correct. Absolutely. You know, real estate, from that investment, like you said, rather than paying somebody else's mortgage individually, you can come together collectively as a family unit or just friends. And the rent that you would have been paying each person, independently to different landlords, you can be the landlord of your own real estate property and put your rent into this property so that that property now grows in value. And at a particular point in time, whoever decides that, they're ready to move on, they could, the other, who's ever remaining, they could give them access to some of the equity in that house so that they can now go ahead and buy themselves their own one family house. So that is, one of the strategies, when we're talking about investing in real estate, which this now leads us now into a REIT, which is real estate investment trusts, which is where if you have some money and you want to invest in real estate, but you do not want to be actually hands-on what's going on in the day-to-day upkeep and management of real estate, probably you could invest in a REIT, a real estate investment trust, and which is managed, it has a management or a manager that is managing this investment trust, which could be a 100 family building, or um, it could be a pod, which is like you find a lot of them mostly out in New Jersey, maybe in Long Island, where a developer buys a couple acres of land, and inside of there they have it's a gated community. They have the swimming pool, they have their club, and they have their own roads and all of that inside of there. That's a PUD. So and they are townhouses inside of there. They could be a row of attached houses, or it could be like a 55-year and older retirement community where you have each person has their own separated home, but that is a real estate investment trust. Now you could a family could start their own real estate investment trust, so to speak, with a full family, or just regular individuals like you and I that have some extra money, and we said, we can put some money into this. We know a developer that do, like we were just talking about Gateway Mall. The people that developed Gateway Mall in over there in Canarsie, East New York area. I mean, that is a money maker. That is going to be here till God comes. That was such a great investment, especially with all of the towers that they're building around it. I mean, just the residents in that neighborhood, their needs are satisfied right there. So all their money, they just walk across the street and just buy everything that they need. They don't have to walk too far. They just need a little shopping cart, and that's it. So that things like that, it's something that Dr. Bernard, Christian Cultural Center, he's building 4 towers, and that is a model that many other cities are looking into. That you can have different areas where you can have these self-contained communities that will service up to 8,000 people.
Right.
And every service that they need, daycare, 24-hour daycare, schools, performing arts, everything that you need, is right there. So those are real estate investment trusts that's a term that everybody need to get familiar. And I was talking to a pastor who called me into not a pastor, a bishop. He was having some issues, and he called me in for some guidance. And I said, well, where you are right now, you know, if the body of Christ was together, the church could have, actually come in now and help you out through this temporary hiccup that you're having. So REITs definitely something that you want to you and the audience there want to really consider as far as investing your money into real estate, because in America we have a shortage of housing, and seems there'll always be a shortage of housing. So definitely a great thing to really consider, putting some of your money. So let's go into retirement investment accounts, because investing in a REIT, that's also a way that you could invest your money, and grow your retirement nest egg. So definitely put that there as one of the things that I must do. So, even if you're not in the market yet, but you want to think of, how you can get in, to become a stock trader, investing
Right.
in stocks.
So let's go back to the RIT for a minute, right?
Mm-hmm. Mm-hmm.
So this is an investment that a group of developers invest to have these like gated communities. That's what you're saying, that
Yeah. Mm-hmm.
Like people like you and I will get involved with the developers,
Right.
and invest in their plan for this community, this
Right.
gated community.
Yeah. It
Okay.
could be a gated community. It could be a
No,
tower.
I get it. Yeah, right.
Mm-hmm.
Okay.
Yeah.
So I get where the investment is coming from. I just didn't want it to be like home ownership. I wanted it to be understood that it's, you know, developing a community.
Correct. Yeah.
All right, so now we're ready for retirement investment.
Yes. And investing in a REIT is one of those vehicles that you could put your money into to
Right.
grow your retirement nest egg.
Okay.
Yeah.
And the acronym REIT
Yeah.
stands for Real
Real estate
Estate Investment
investment
Trust.
trust. Yeah.
Gotcha. All right, so go on to your retirement.
Yes. So there's a number of retirement accounts, and each one is designated to meet the different needs of the type of investor. So, but basically, mutual funds. Everybody know what a mutual fund is. So a mutual fund is a collection of investments. It could be stocks, bonds, commodities. All of them are bundled together, and held in common by a group of investors. So when you think of a mutual fund as you're going down, you're shopping at the supermarket, and you're going down each different aisle, and you're picking up different things, different products. Or you could be getting soap, toothpaste. Different companies own manufacturing all of these different um, products, items that you need. It could be rice, it could be a company that is trading on the stock market are the ones that made those products and put them there. So you're shopping, going through the aisles, and when you pick up an item, that is like, okay, I bought a stock. So pick toothpaste from Colgate, the company made that makes Colgate. You just picked up a, a tube of toothpaste, then consider that you just picked up one share within that from that company. And you're going through it, and so then your cart now is full with all of these different items. So consider each one of these different items a stock. So that is a mutual fund. So your cart now is, if that gives you a better vision, that now you have all of these different products that were created by these different companies. Each one of those products represent now that it's a share that you just purchased in that company.
Okay, so I have a basket
Mm-hmm.
and I have stocks and bonds, and it could be different stocks, right? So I can
Correct.
have stocks in a grocery store. I could
Right.
have stocks in a car dealership.
Correct.
I can have stocks in a school.
Mm-hmm. Right. If this
Right?
stock, yeah, if it's a privately owned school. Mm-hmm.
Mhm. And bonds the same way, right? I have various bonds which we discussed were and we'll talk about again, which
Mm-hmm.
is governmental
Yeah, bonds. A bond is like you're lending the government your money
right,
for them to do a
or
project.
project,
Yeah,
right.
right. And that is that you have a fixed return on that money. So they could issue the bond and say the return on this after a certain amount of years, it's 4%. That's a bond. It's fixed for a period of time. Unlike a stock, which now is traded, the value can increase, and when there's a hiccup, it could drop. But
Right.
you know that whatever you paid for the bond at the end of the period, the government is going to give you back your money at the rate that you had invested your money into. And different from a stock, which you can buy it for $100, and then 10 years it's worth 400 or 500, depending on which stock it is. So just know the difference. If you and it all it the difference, the key thing in those who want in some income security it's like a senior, they've got X amount of money and they don't want them, they have a low risk tolerance. They would prefer to buy bonds, and they know that it's free from all of the fluctuations in the market. So they know exactly what they're going to get over that period of time. They don't want to risk, the volatility of the stock market.
Okay, so we're going on.
So we're going on now. So we're going to talk about the Roth IRA, which is
Right.
which is, the IRA stands for the Individual Retirement Account. It boasts special tax benefits. You're limited in how much you can contribute each year and by the type of investments that can be held within the account. So when you contribute to this account, it will be with pre-tax. That's pre-tax money, which is different from a Roth, which is after-tax money.
Okay, so a Roth is after tax. So I'm investing in, okay, so explain it to me. Explain it to me. Break it down, break it down, break it down.
All right, so the IRA, right? It's I'm sorry.
No problem.
Yeah, it's fully or partially tax deductible, right? Because remember, it hasn't been taxed. It's what you call matching funds that the owner of the company is going to match a percentage of whatever that they agreed upon. So if they're doing 5% and you're putting away 5%, then the company is going to put 5%. Right? So that's like you're investing a portion of your pre-tax salary.
Mm-hmm.
So you won't be taxed for any earnings or the gains until you withdraw the funds. So some people look at their 401k and they see $100,000 in it and they think that I got $100,000 for my retirement. But they don't understand that, when they're retiring, it's going to be taxed,
Right.
because you won't be taxed until you make a withdrawal sometime between when you're 59 and a half, 70 years. So you really got to be wise. And if the company where you work for and they're only matching 3%, don't put more than 3%. So some people, they want to put 5 and 6%. Is better that you just match what they're matching, and then the other 3%, you put that into a Roth, which is tax-free.
Okay, so explain, we go over the Roth again. The Roth is tax-free, you said.
Yes. Yeah, because it's after tax. So when you're contributing to this account, it will be with after tax dollars. So for the gig workers, the hair salons, the barber shops, the delivery guys, the cab drivers with their tips, the bartenders with their tips, those are after tax money. That's the kind of money they just need to just drop into a Roth, because most of the gig workers don't have any retirement.
Right.
So it is for them to start thinking, okay, I make $300 a week in tips. Let me put aside 100 every week into my Roth, and I'm gonna get minimum 7% return. you'd be surprised how much that accumulates into a, in the end, you know.
Absolutely.
So
Absolutely.
it's important that people really learn the benefits of, putting their money into a Roth. Because you're not going to be taxed on any of the profits that you made from the investment. So as long as you follow the rules, and it's going to be all right. It's definitely the best thing for people to be doing right now, because most companies are, there's no pensions anymore unless
Right.
you,
I was
you
just
lock
about to
into
say that,
certain
right? They're
things. Yeah,
not even
yeah,
considering retirement at this point.
correct. Hmm.
Those are expenses that companies just aren't looking to take on,
Oh yeah.
especially with the uncertainty of everything that's going on in the economy.
Yeah, because even when you look at Social Security and all of that kind of stuff, so what the thing is that um the the government wants small business owners that has companies that have staff of 20 and below to set up retirement plans for them, because they're shifting their responsibility on, down to somebody else. They're not taking on those responsibilities, as you see what's Doge is doing right now. So you know a lot of people didn't just use their jobs. Remember, they used their medical benefits.
Yes. Yes.
They lost their life and health insurance. All of those things are gone. So, now you've got, it's going to be a big adjustment. And I know that there's some people are watching, and when they hear certain people were impacted because, they voted a certain way, but look at it as a lesson for yourself, and think, wow, what if this was to happen for me, rather than sit there, and laugh at someone's pain. What are you doing? What are you actually, learning from that experience, somebody else's pain, as to what you should be doing, to make certain that you get yourself covered. Many people, 43% of Americans don't have life insurance.
What this did was raise awareness to the importance of voting, right?
Knowing, not just voting.
And knowing, no, but
Knowing
you know,
politics of the
to be
land.
fair, to be fair, all along from 2017 come down, he's been letting us know
Hmm.
what's coming down the pipeline and what to expect. You had to be like the monkeys,
Mm. Oh
blind,
yeah.
deaf, dumb. You had to be like the monkeys for you not to anticipate that if this was going to be, and even his running mate said, if this was going to be the case,
Hmm.
then you have to expect
Hmm.
some drastic changes, which is
Hmm.
what occurred.
Hmm. And you see, the thing is that, as you talk about monkeys, um, you can train a monkey to do tricks. So when and the big difference between the monkeys and human beings, at least we should be able to analyze situation, but we still didn't analyze that. We just went along like a monkey and just jump around, and now here we are now actually see what's happening. But
I don't know if it
like
was
you said, the writing has been on the
that
wall.
carrot that crypto carrot had a lot of people jumping, right? That's all they heard.
Yeah, yeah, yeah.
You understand what I'm saying? All anybody heard, anybody and everybody
Yeah, everybody wanted to get some more.
just heard that crypto
Uh-huh.
conversation.
Oh yeah, oh yeah. That's the biggest con. It's not everybody's gonna the percentage of winners in comparison to the losers. You'll hear about it. You don't hear the part. They talk about pyramids. That's one of those situations there.
Right, right.
But when you study that intently, The guys who started out early, they're good. They're at the top.
Absolutely.
Mhm.
Absolutely. All right, so we moving on to 401, or we
Yeah, so we touched on the 401k, which is, every company offers that.
mhm.
It's kind of an incentive for people to come and work for them because technically the 401k plan, it really, when you go and understand the workings within, the companies benefit more from it than even the people who are receiving what they're receiving. So it's a good, like you were saying, a good carrot to pull people in, you know. But definitely, if they were allowing people, if people understood the vast difference between their 401k and their Roth, they for the period of time that they were contributing to the IRA and they were putting the same amount or even half that amount of money, they would have so much more money today in their retirement nest egg.
So what I got in my notes is it with the 401k plan, companies match what you put in each paycheck. Once you retire, you will collect on the investment. However,
Mhm.
it will be taxed. If you leave the company before the retirement, you can roll over your 401k plan to a management company to make the best of your interest on your stock, right?
Right. Those are the notes from the last time. Yes, you got it
I could take my notes. I could
right.
take my notes. Right? So explain that, break that down a little bit. I know that it was very clear, it was very concise, but we walking people through these terminologies that probably don't have any idea what that is, what that all of that jargon is. So
Mhm.
basically, to me, it means look, as you said last week, right? If I leave a company before I retire and I've been investing out of each of my paychecks,
Mhm.
let's say $25, $50 out of each of my paychecks, right? Maybe $300 a month. Okay,
Right.
we're gonna say $300 a month
Mhm.
for the past 15 years. And I'm not at retirement age, however, I moved on to another job.
And
I
you
can
left it there.
know that the best thing for me to do at that time
Mhm.
is to find a management company to manage the monies that I have in my 401k so that now this money is not going to just sit. Now I'm going to start accruing interest and making money on my money.
Correct, because the fund manager, because some of these 401k,
Mhm.
right? It's small money, and some companies don't want to put their big guys to manage this little bit of money. So they could be getting 3%, 4% on that money that's just sitting there. So now you put that now to a company that's managing the money. They're going to go and look at all of the different mutual funds that are out there. And of course, they get paid. The fund manager gets paid on a percentage of the growth of that fund that he's managing. So of course, it's in his best interest to take that money and put it where it's going to give the maximum growth.
Right.
That's how it works out when you say it's management. So some people, the cheap ones, the ones in the back of the room, they always try to say, well, why should I pay someone to manage my money? You follow? And they're not understanding that everybody has to work. And when the incentive of the fund manager is for the fund to grow, then you are going to be the one that's benefiting from it. So it's always good to, when you can, because he's going to
It's
definitely
like
look
breaking you off a little 3%, I gain you, we it's a win-win,
for
right?
winning. Yeah.
I got 8, I broke you off with 3, I still walk away with 5, we good.
And it's not even, they don't even get paid that much. That's such a high percentage. Because remember, the fund, if the fund manager is, if he's managing 10 million or 50 million and he's getting 1% of that, he's doing good.
Yeah. Yeah.
You know, so
Right. So that's a way of looking at it too.
yeah.
Okay. So I got my 401 and my 403B, which is for nonprofits, right?
Right, we covered the nonprofit last week, the 403B. The only thing we didn't touch on the simple IRA.
Oh, okay.
Yeah, that's for us. That's our savings incentive match plan for employees. It's meant for small business owners who have fewer than 100 employees.
You said simple IRA?
Yeah, simple IRA. So they have fewer than 100 employees, but they still want to offer them a retirement benefit. So so they have it. So it could be that way. It could be profit sharing. And then you have a SEP IRA. That's a SEP IRA. It stands for Simplified Employee Pension. This plan is ideal for the self-employed, because employers can make direct contributions to individual retirement accounts. And you could contribute as much as 25% of your net earnings from self-employment. So yeah, you own your own business, but yeah, not because some people own their own business, but they don't even treat themselves as an employee. They're the last person to be paid. So yeah, so
So up to 25% of your income could go
go
into
into that. Yeah.
retirement account. I got you.
Okay, so I want to go into. So we had touched on.
Mr. No. Simple IRA is for small businesses fewer than 100 employees. They can invest in the IRA or what was that? Profit something?
I'm sorry.
Simple IRA.
Oh,
It's
the simple IRA. That's
yeah,
this. It stands for Savings Incentive Match Plan. Yeah, that's for less someone who has a company with less than 100
right.
employees.
And they can either
It,
invest in the IRA or in profit
so
sharing, you
it,
said?
yeah, no, well, no, the profit, no, it's like an either or. So if you have a
Oh, right.
company,
Or that's
or
what I have. I have or.
yeah, 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 if you got a small company and it's doing very well,
Mm-hmm.
you could set up and set up and their own little simple IRA. It's less complex administratively than a 401k plan.
Got you.
Or you can just do profit sharing.
Which is
You give them a piece of the profit. So whatever the company is making, you just give them a percentage of the profit. That's profit sharing. So if your company is making, let's say your company is making you have $100,000 profit, and you got 10 employees, and you give each one of them, you give them 50%, everybody gets $5,000. That's profit sharing.
okay. And that goes into their IRA.
Yeah, right. Yeah, they could decide what they want to do with it. It's their money. They now in turn could figure out if there's profit sharing, they want to they could figure out where they want to put it.
Right,
Or they
because
could, or based on the owner of the company, he could say where he could decide where he wants to put it.
okay,
Mhm.
okay. All right, let's move on. We talked about simplified employee pension, which is set, right?
Mhm. Right. So yeah, we were talking about we were talking mutual funds. So where is your money going? How is your money growing? What is
Yeah, how is my money growing, right?
so the to grow that money, it's going to be grown in the stock market. So whichever plan or whichever company that management company that the owner of the company or entity or nonprofit organization you work for, and they're matching your money, they're buying stocks, they're investing that money in the stock market. And so in the stock market, everything is really goes just the same way as we were talking about, the supermarket, and every product is a share.
Are you
So
aware of where your money is being invested into? So let's say that I have a management company overseeing some money that I had in my 401k, and now they would take that in turn and invest it in Tesla.
yes, because you saw an article right now where the teachers union um, last week, the teachers union want the fund where their money is at. They don't want their money. They don't want their money they don't want any shares of Tesla.
Well, after they lost, they're losing.
Right, they're losing, and it's not just it's a protest. It's a protest as well. It's
Yes.
not that they're losing money. It's just that they're using you've got the
Right.
say
Right.
so as to where you want who makes money off of your money.
Right.
So they would like their money, the fund manager, to no longer invest their money in Tesla stock.
Stop. Right.
Yeah, because there are other stocks that are growing and um, are remaining stable. Even in the turbulence that's on Wall Street, there are other companies whose stocks have not suffered or declined
Mm-hmm.
in the way how Tesla stocks is going on. So yeah, definitely they're making a protest as well, a moral protest with their money, basically.
Right.
You know. So yeah, so everyone's money is invested generally in the stock market, um, and as you were saying, most people don't know they who is the fund manager that is managing their 401k plan, if it's being managed at all. So when you do a rollover, right, and you meet with one-on-one, right, with a financial advisor, he's going to show you all of the different stocks that there are, explain each group of that you see, each fund tells you what's inside of it, shows you what the performance of those mutual funds, and then you could decide, you have a decision as where your money is being invested.
Okay.
That's the fund manager. So you get to choose now how,
Mm-hmm. Your money
where
has
you
been.
want to put your money.
Mm-hmm.
Unlike the 401k plan, you have no say so.
Right. Right. Okay.
Right. So, so when you want, so in the stock market operates, individually, you can go buy, you can buy one share or you can buy 1,000,000 shares based on your needs. So everybody is equal. The little kid that has $25 has is welcomed alongside the guy who's got $1,000,000 to buy shares. It's a level playing field for everybody. That's the good thing about the stock market. And you can go buy your share. A share represents a unit of ownership in a corporation or financial asset owned by investors, and they, you know, you know. So a share, you have a stock, which is also, known as an equity. That represents a fraction of ownership of the issuing corporation. So Heidi Washington opens up her company, she launches it on the market, she has a prospectus. You can touch on that word. So a prospectus is just saying, this is my stock. I'm offering it at this price, and I tell you everything about my company, what's my goal, my agenda, things like that. And you decide if when you look into it, if you think that, based upon your game plan, you want to buy a share in it, prospectus. Right. So you could, a bond now, right? We've touched on that. The bridge in Maryland that, needs to be rebuilt.
Right.
Right. So the government, when they need money, they go to the general public and they borrow money from the general public.
How does the general public find out about which bonds are being offered?
You could, most people who have a little inkling, or a little understanding of it, again, what it comes down to, you have the fund manager, the person who is managing
Right.
your 401k plan. He knows what's going on. Maybe they wouldn't, based on, your financial advisor, and he knows about it, and
So it's like an insider trading thing, they
yeah,
find.
no, it's public knowledge. They post all of that information. You find it in the newspaper. It's there. Everybody who's looking for it. Your mom, somebody who's 70, 80, got
Right.
$100,000 in the bank, getting 0.5%, and they're building this bridge,
I get it. And they're offering 2% back
right?
for investment. Yeah, I get
Yeah,
it.
and the government say, I'm going to give you 4% return on your $100,000.
I get you.
You're not going to leave it in the bank. No matter what age you are, money is money.
Right. That's
You
right.
know, you're going to take that money out and say, I know if Uncle Sam said he's going to give me back my money, I know I'm going to get it. Has always been a safe return, and that's it. It falls under or to satisfy the those that have low risk tolerance, low risk tolerance. Because they're at that age, they can't afford to put their money in the stock market and it goes up, down, up, down, up, down. The stress of that will get them a stroke, a heart attack. you know, so they know, okay, I know I'm gonna get 4% rather than 0.5% in the bank. I'm gonna buy that bond.
Right.
Even if I don't live to see it mature. Mature means the end of the period. So you can buy a bond for 10 years, you can buy a bond for 15,
Right.
but if I ain't gonna, I might be around in 15 years, but it's gonna be part of the estate that my children and grandchildren will inherit.
Is there anything else that we didn't cover?
Besides we do the stock, the bonds, the stock exchange.
Okay.
Yeah. Yeah, it's called the stock exchange is the place where buyers and sellers come together to buy and sell and trade the stock.
Right.
and the bond during a set business hours. Right? So the New York Stock Exchange, abbreviated NYSE, right? That's one of the most important stock exchange in the world.
In the world, right.
Right. But there are a total of 16 exchanges around the world. So England, China,
Mm-hmm.
everybody has a stock exchange. So while we might be asleep, and we wake up in the morning and something must have happened overnight in some other country that would know when we wake up in the morning, or was the New York Stock Exchange has been affected.
It's been affected. It's either plummeted or
Or something,
mm-hmm.
So you got the stock market, that refers to, in general to the collection of the markets and the exchange where the buying and the selling and the trading of investment vehicles, not like a car, the term vehicles. These are
Right.
just different, um, um, for lack of a better word.
Platforms.
Yeah, not platforms. It's more like products, not um, a vehicle would be like, for example, a fund, a mutual fund. So one fund might be worth this, one fund might be worth that, so, and you have, as far as different, you have like the S&P 500, which is the Standard and Poor's. This is like, index is the stock market index that tracks the stock performance of the 500 leading companies listed on the stock exchange. You also have the Dow Jones, you have the NASDAQ. I mean, we're just talking what's going on in New York,
Yes.
in America. So we have all of these different companies. I wanted to get into, which is important that people know, because some people who were talking about why should I invest my money in the stock market, and they're scared about the stock market, about losing their stock market. The monitoring government, there's two agencies that monitors what goes on, the people who are in the stock market and who have licenses in the stock market to do business or transact business. So they are governmental agencies that protect people's monies. So, for example, Bernie Madoff, and the Ponzi's, that when a lot of, retirees lost their money,
Yes.
right? So I don't know how he was able to get by FINRA, which is the Financial Industry Regulatory Authority. That's a
I
private
got a financial
FINRA.
FINRA, and that stands for financial.
Industry Regulatory Authority.
Okay.
Yeah, it's a self-regulation regulatory organization that regulates the member brokerage firms.
Wow.
And and exchange markets. So they're like the FBI of the financial services industry. So everybody who has licenses, like I have license, I have to behave in a certain way.
Right.
Yeah, you get arrested. So Bernie Madoff, remember, he went to jail. He died in jail.
Yes.
And
Yes.
the kid just recently with the crypto stuff, he's still in jail. He's Didi's roommate. Um,
We're gonna be nice. We're gonna be nice.
yeah, So yeah, so these and then you have the Securities and Exchange Commission. Yeah, that's an independent government body that was created to protect investors, regular people, and the national banking system. So
Okay, repeat that. Securities and what?
and Exchange Commission. Sorry, Securities and Exchange Commission. Sorry, folks.
And that's an independent.
Government body. It was created to protect investors and the national banking system. It enforces laws that maintain orderly, fair, and efficient markets. So the stock market is not the wild, wild west, folks.
That should give people a peace of mind when they, now considering, because we hear so many things about the stock market and not being certain, and now that should give people a little bit more of a security.
Well, I think more than that, just remember, every elected person in Congress have stocks. They have a portfolio on the stock market. So just look at that. Their money's there. If their money wasn't there, then you should be concerned. But when you really look at, and people always say, oh yeah, just went in there, they had X amount of money, and they come out and look how much more money they have, because
they're investing
every month, yeah, they take all of them, a percentage of their money, and they just leave it there in the stock market and they let it ride.
Right.
The stock market goes up and down. It's been here for 100 years.
Yeah.
So when you don't invest your last dollar in the stock market, you play the long game. Because if you understand, when you sit with a financial advisor, they're going to ask them to show you the historical performance of that specific fund that they're going to put your money in, and that they can show you that
Right.
over a 25-year period, over a 50-year period. You had a little outage there.
Yeah, we had one earlier.
Mm-hmm.
So it seems like, it's still kind of going on. We have some storms on the other side of Texas. I told you Texas is so big. It's like about 4 or 5 of the East Coast states, but somewhere we getting facing tornadoes and things like that.
Oh, okay.
On our side, but on
the other side of Texas.
Yeah, on the other side.
Mm-hmm.
But that still, we get those flashes.
Mm-hmm.
Yeah.
And the fact that as we're having this conversation, I'm here on the East Coast and she's here over there on the West Coast, but we're still talking about stocks. So we're talking about something that is nationwide.
Absolutely. Absolutely. Everybody want to know how to make more money and how to make money on their money, Phil. This is why we having these conversations.
In America.
We just stick the money in the mattress. We don't just want to stick the money in the banks, so that we're not seeing our money increasing, right? If that's the case, then, although that mattress money saved America once upon a time, right? And we know
correct.
Right? Black America saved America once upon a time with all that mattress money. Right? Black-owned banks to the rescue. Black-owned banks to the rescue. So thanks again, Phil. Thanks for coming on. Thanks again, Trendsetters. Thanks for this recap. And next week, we're going to have a guest talking to us about home ownership.
Yeah, we're going to bring in next week. We have a real estate mortgage banker. That is something that Al is definitely, he's 25 years in banking. So full of
wealth
of knowledge.
So we got someone coming on next week that's going to help us out with some of these things that some of these questions that, you know, we still need some clarity on.
Yeah.
And this is helping us to sustain, you know, generational wealth. That's what
Yeah.
that's what our end game is, right? That's what our end game is on financial conversations, is to
And
help
I
people.
wanted to, there's two things that I wanted. That's my son. He expects me to pick up the phone whenever he calls. Oh, two things that I wanted to leave people with. Because we would, I don't think it's an emergency. Portfolio. This you know, you hear this word going on. What's a portfolio? And
Did you respond to him and let him know that you're calling back?
I told him it's a text. Yeah.
We can't be too sure with these kids nowadays, Phil.
Nick, what's up?
Mute it, mute it.
No. I'm yes. Yeah, no. Portfolio. So,
Portfolio.
yeah, we were talking about the portfolio because with so when it comes to uh planning for retirement, right, as we were talking about stocks, right, you know, which is, like you said, a basket of different shares of different companies inside of it.
Right.
And then for when you're retiring, right, you want to have a portfolio, which in your portfolio, that's having, acquiring and managing an array of different financial assets. So you wouldn't just have stocks. So you would have some stocks and you'll also have some bonds, right? Because remember, stocks fluctuate. And we said that bonds, right, is giving you an agreed percent return on your money, right? So you know that's a stable income, right? So you have a fluctuating and you have something that's consistent and stable, which is bonds, right? And then you would have some other securities and other investments like the R.E.I.T. So in your portfolio, you'll have stocks, bonds, right? Your real estate investment, trust, right? And then you'd have some other securities. That would make up your portfolio.
Okay.
Right. So and you do that now, when you're doing that, right, you're diversifying, right? And the reason for diversifying is is as a risk management strategy.
Okay.
So diversification is one of those key things that you need to do, right, to create a mix of various investments within a portfolio. So like not having all your eggs in one
In
basket.
one basket, right.
Right. So diversification.
And you said another one that you wanted to talk about. It was portfolio and another
It
word.
was just portfolio and diversification.
Okay.
Just those two. Yeah. Because as we were talking stocks. So I wanted to keep that
Okay.
in
Tied into everything,
yeah,
right?
it ties into everything. So we kind of, you know, went step by step explaining your 401k, you know, you take that money when you retire, you put it to a fund manager, they're going to put it in the mutual fund, right? And based on the risk tolerance, they're going to get you some bonds, right? Again, then you have another opportunity coming around where you can invest into a real estate investment trust. So now you've got those three items, you know, in your
Mhm.
portfolio, and whatever you see comes along, you know. So in your portfolio, you could have four things, five different things.
Right.
Each one of them is there to maintain the stability. If one is up, one is down. And that's the safe thing about having a mutual fund, because a mutual fund you could have Tesla inside of there and McDonald's inside of there and Amazon inside of there, but Tesla is down, but everybody else is up. So you ain't losing. If all your money was just in Tesla and it's going down like that, then you know you're gonna have a heartache.
Right.
So diversification,
Which is important.
which is
Again.
important. Mhm.
I guess that wraps us for the night.
Yeah, that wraps. That's it.
Thanks again, Phil. Thanks again for all your information. Thanks again for joining us on Trendsetters. You know, thanks, Trendsetters. Thanks, Trendsetters, for joining us and supporting us. And you know, every Monday we're live on Zoom. This is not a closed session. This is an open session. So we are inviting you guys to come and sit down and talk with us. The Zoom information, the Zoom number is 866-1733 something, 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 something. I was doing good. I'll put it, I'll put it on the caption. I'll put it on the caption, y'all. It's been a long day. Thanks,
Yeah.
Phil. Thanks for coming out. And I'll see you guys next week. Peace.
Yes.
Be blessed. Be blessed.
Mm.